Over the last 2 decades, there have been a growing number of American investors planting their flag all over Europe, parking billions of dollars into soccer clubs. I know what the comments are going to say. It's called football, and that's a fair point. But I think if I was to call it football, I'd have to do this video in a British accent. And I don't think I can do that, bro. Plus, the way things are going, all of you across the pond might soon be calling it soccer too. Professional soccer on a global scale generates more revenue than any other sport. But what's surprising is that owning a European soccer team doesn't typically generate a profit, at least for now. So then why have more and more American investors been shelling out their cash to own these teams?
American investors, by default, somehow business driven. There is significant room for growth.
And while growth is the long-term goal, to get there, American investors are betting on some key changes in the sport. Let's first set the stage on why owning these teams comes at a net loss. According to Deloitte, back in 2022, total revenue across the big 5 soccer leagues in Europe rose to a record $19 billion, up from $10.3 billion a decade earlier. But the money coming in isn't necessarily the problem. It's the money going out. A big portion of the revenue being generated is reinvested into the team, specifically the player contracts and transfer fees, which is basically the agreed upon compensation that an interested club pays to another club that holds a player's exclusive contractual playing rights. And obviously, the more marquee the player, the bigger the fee. Teams have been shelling out millions and millions on these fees in order to bring in new talent. In fact, just in the summer of 2023, a record $7.4 billion was spent by soccer clubs on transfer fees. And this isn't the only cost these teams are incurring. Once a transfer fee is negotiated between teams, it then has to negotiate a salary with the player. And unlike US major sports leagues, most European soccer leagues don't have a salary cap for players, which is why back in 2017, an 18-year-old Kylian Mbappe was earning more than $17 million a year. Or you can see a player getting offered a $1 billion contract. Okay, this contract was reportedly offered by a team in Saudi Arabia where they shit money into golden toilets and don't know what to spend it on. And European teams aren't offering sums like that yet. But just like any other employee does, players leverage competing offers to negotiate a higher salary. Football players can and will do the same, thus leading to high, often inflated player salaries. Players obviously bring tremendous value to the performance of a team, but in doing so they hit the owners where it hurts, their profits. This increase in spending led to an intervention by the European governing football body, UEFA, in 2011.
So UEFA has started to implement for the first time ever in football a system of regulations and monitoring, mostly of financial nature. So you cannot spend more than a percentage of what you earn.
And as a result, the teams from the top 5 European leagues, in aggregate, began turning a profit. But then COVID hit, and it reversed the progress football clubs were making towards profitability. At this point, the clubs were facing rebates from broadcasters, stadium closures, which meant no ticket sales, and fans spending less on merchandising. And companies who sponsored clubs were unable to honor their contracts because they too were suffering. American investors capitalized on that.
An investor would come and say, hey, look, I bring you the cash to pay your salaries and to give you a future that maybe nowadays you would struggle to have. So that was another factor that lured American investors to buy football clubs, in some cases also at cheaper prices.
For example, Chinese conglomerate Suning, who owned a majority stake in Inter, an Italian club, took out a $326 million loan at 12% interest from US investor Oaktree Capital during the pandemic. That debt ballooned to almost $446 million, and with Suning unable to pay it back, Oaktree seized control of Inter. And since 2020, 12 clubs in Europe's top leagues have been taken over by Americans. Now you're probably thinking, couldn't these teams just stop spending so much on these players and reel in on the spending? At least for now, the general answer is no. Again, this is extremely nuanced. You need to spend millions to lure talent to your team in order to compete, because if you don't, your revenue is at risk. Which brings us to yet another crucial challenge for American investors, the open league model. The way European soccer is structurally organized kind of looks like this. At the top is the first division, and the rest of these are lower tiers. This league up here is where the big money is. This is where you see the biggest broadcast deals, richest commercial partnerships, and the most ticket sales. But as the name dictates, it's an open league, meaning at the end of the season, the league's worst performers, usually the bottom 3, are demoted to the tier below. On the flip side, the top 3 performers from the below tiers have mobility to move up. This is called promotion and relegation. Another huge difference between European and American professional sports. The stakes are higher to perform in an open model. Otherwise, you're at the risk of losing millions after each season due to the sheer revenue difference between tiers. It's not like here, where no matter how bad your team performs, you will never get kicked out of the league.
And when you don't have the risk of relegation, then it's when somehow it's easier to increase the value.
Just take a look at Burnley, an English football club owned by investment firm ALK Capital. They paid $264 million for the club back in December of 2020, soon after the club got relegated. Their revenue dropped from $163 million to $85 million as a result of their demotion. But where some people see this promotion and relegation model as a risk to their financial sustainability, others see it as a growth opportunity. You can buy a team at a much lower division where the team prices, transfer costs, and contracts are less expensive, and invest to raise it up the ranks. The best example is what Ryan Reynolds and Rob McElhenney have done with their football club, Wrexham. They bought the team for about $2.5 million when they were all the way in this division. After numerous investments in bettering the club's performance, it started to rise through the ranks, and now sits 2 divisions away from the lucrative Premier League. If Wrexham reaches the Premier League, it could be valued at more than $100 million. But these sort of deals don't come with the same swagger as owning a team in the top division. So the mega-rich billionaires have their eyes set on the Chelseas and the Man Uniteds of the world, and they're doing a few other things to increase the money coming in. Back in 2022, a consortium led by Todd Boehly and Clear Lake Capital bought London-based soccer club Chelsea FC for $5.2 billion, which marked a record sale price for a professional sports team. At the time, other interested buyers included the Ricketts family, owners of the Chicago Cubs, who had teamed up with hedge fund tycoon Ken Griffin. Also, Woody Johnson, the owner of the NFL's New York Jets. Are you seeing the trend here? All these American bidders, including the ultimate winner for Chelsea FC, have experience owning and running sports teams back in the US. In fact, if we look at the 9 teams in England's top division with American ownership, 7 of those owners also own a sports team back in the US.
So you go to Europe, but you're from Los Angeles, and you can bring some American sponsors to that European club.
Just look at the recent collaboration between Italian soccer club AC Milan and the New York Yankees. This collaboration only happened because both teams are under the same ownership group, Redbird Capital Partners. And the possibility for collaboration is endless. Currently, the Premier League boasts 1.87 billion fans across 9 million homes in 189 countries. But it doesn't command the same viewership in the American market when you compare it to the NFL, which averaged 17.9 million viewers in 2023. But the Premier League has been seeing growth that has American investors excited. Last season, the Premier League broke a number of viewership records on its various platforms and was the most watched season ever in the US. These clubs are partnering with American companies and bringing in American celebrities as part owners. They're bringing these teams to the US in the summer to play exhibition matches in hopes that it will grow their fan base here in the States. And with that growing fan base and increased viewership, the European leagues can leverage that when negotiating media deals. And it's something that European soccer leagues desperately need.
In Europe, the trend is that domestic media rights are either plateauing or decreasing.
Media rights are usually a point of reference for the strength of a league. And so with broadcasting deals in Europe drying up, US investors are continuing to lay down the groundwork for the gold mine that is the US market. And it seems that American investors are just playing the long game. Currently, 9 out of the 20 Premier League teams are American owned, as are 8 teams in the Italian Serie A and 5 in the French League. Let's use the Premier League as an example. In order to pass new league rules, major broadcast and commercial proposals all require the approval of at least 14 clubs, which would be 2/3 of the league. So let's say 5 more owners, American or not, were aligned with transforming the sport the way American investors want. Then the majority vote could push the changes that would allow these teams to be more profitable. New regulations have the potential to create clear paths towards profitability for these clubs, like implementing salary caps like we do here in the States, or creating a closed league in Europe, which they tried to do before. The Super League was supposed to be filled with only the best and or richest teams in Europe. These investors would be able to sell the broadcasting rights for the Super League, as well as the commercial income estimated to be worth billions. These founding members also decided that spending on transfer fees and wages would be capped at a certain percentage of revenue, which would theoretically give owners a chance to restrict their spending and maximize their income. In fact, one of the masterminds behind the Super League was John Henry, owner of the Boston Red Sox and the Pittsburgh Penguins. The idea was eventually scrapped. Though other owners fought for it, it was actually the fans that ended the dream of a closed league in Europe. American investors haven't factored in just how much influence fans have.
That's the peculiarity of football. At the end of the day, fans want their club to win. Fans don't care about the balance sheet.
Which brings us back to the long game, and it's a strategy that makes sense. Soccer clubs don't decrease in value. They only go up, though some believe that these valuations are a bubble. But If some of these regulations are eventually passed, the value of them would go up even more. Do you think the end goal is to eventually resell the club for a profit?
Absolutely. That's the goal.
The Glazers, one of the first American investors in European soccer clubs, have been looking to sell their club, Manchester United. In 2005, they took control of the club through a leveraged buyout. Right now, they're asking for about $7 billion, with a few bids reportedly coming in at above $6 billion. That's a pretty nice return.
So I buy a club X at 5, I add value, I don't know, I revamp the stadium, I build a new stadium, I win a trophy, and I buy it at 5, I sell it at 9. That's business, right?
And so while running a football club might prove difficult at this time, it's an investment that just continues to accrue value. It's also a pretty baller move to say that you own one of the top soccer clubs in Europe.